Welcome to another episode of something we call top secret trading on Tesla. Now, as and today's up and down basically 100 points gives us an opportunity to review process on trading. And because it's top secret, there's no getting angry. You either do or don't want to learn, and if you don't want to learn it, don't watch it, is an idea. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show and would like to learn more about better investing and trading at an important time for Tesla, I want to encourage you to like us and subscribe and get to us on Patreon because at the $100 or more level, you get training or trading courses every day. So I wanted to also note this show is copyrighted. Any use of the material here is prohibited, and wanted to encourage you to do your own show and not copy ours. So what happened is that a very interesting thing happened. I was thinking about, now that we're back in a trading environment that looks a lot like what we saw last year, I was in a mode where I was like, wait a second, this is a good time for us to review certain trading fundamentals as a way to enhance your skills as you're seeing all this action on Tesla. So we haven't done a trading show in maybe at least a week, if not two, and we had one of our regular viewers skewer me. What he was saying, if you look at the last comments on the last show, he was saying, I can't believe you allow people or encourage people to buy puts on Tesla and do straddles or do iron condors or do any of the things that we've been teaching you about, because guess what? You're not supposed to know this. But if I tell you it, and I told you it was top secret, therefore, do you know anything about it or not? 'Tis the question. So based on the fact that I was told I can't tell you guys to buy puts, guess what I'm going to do? I'm going to tell you about buying puts today and kind of what the discussion that we had was about. So let me give you an example of how this party works. So today, Tesla got up to, let's say it was $185 or $1,085 a share, maybe even $1,090, for a second there. Now, what's very interesting about this is there are people called investors that have a lot of Tesla shares. So let's say for the giggles, you had 1,000 shares of Tesla. Well, and obviously that's high. I think the average for our viewership is probably in the 500 to 1,000 range. So probably 20% of our student body is someplace in that 1,000 and above department. So let me ask you call it a dumb question. Once Tesla was up at, let's say, 1,085, in theory, it could have kept going. But in theory, it could have did what it did, which is the low, I think, was $1,005 a share. So basically, for somebody who had 1,000 shares, and let's say 100 times 1,000 shares, 10K. So what I thought was interesting about today is that Tesla's kind of in a risky zone right now. There's this equal and opposite anytime there's an equal and opposite reaction, stuff like that does happen. By the way, there's another person that was explaining to me that, oh, by the way, it could have been a short squeeze for this reason. Well, guess what? There's a whole bunch of people. When you look at the stock market, everybody wants to tell you that everything is great. Everything you need to know is all contained in this one strategy, and no other strategies are going on. And I just want to inform you that there's a lot of money out there This is not a highway with roads who only go in one direction. We're out in the ocean, and there's something called chumming. And once you chum that water, all kinds of stuff can show up based on that chumming and go for the feeding. And so there can be 5 or 10 different strategies all lurking at the same time, much like a feeding frenzy for sharks. And I believe that's what we're seeing right now for Tesla. So again, one of our folks was saying, oh, it couldn't be a short squeeze because of this reason. Well, did you notice how the stock price went boom and then went boom again? One of the signals that that means is that there are certain people who had covenants, and the other people knew what those covenants were. So all they had to do is force the stock price up temporarily, breaching the covenants of those hedge funds. And those hedge funds would now have to buy the shares back, which I think is why the stock price was up dramatically. And then once they finish buying to close out their positions, there's no support anymore to keep the stock price up. So that's why it goes boom. So is this exactly what occurred? It may not be, but because this is top secret, that's what I believe occurred. So what I specifically wanted to focus on today is the whole idea of using options as insurance. So kind of what is that about? Well, in a best case scenario, right? Let's say you have $1,000 stock times 1,000 is $1 million in shares, right? So what you could have done today, in theory, because there's 100 grand on the table when it came to the stock being up $100 today, what you could have said is, hey, I like my profits today. We're up, 1185. Why don't I do a dumb thing like Greg suggested and take 5 to 10 grand and just buy some puts that expire this week or next week at 1180, right? So guess what happens if you did something very dumb like this? All of a sudden, when the stock price actually dove back down to 10, call it 1010 or 1,005 or 1,010, you could have said, hey, I'm a long-term Tesla holder. I really don't care about sticking around with the puts I purchased as a hedge. I'll simply sell those puts at a profit that I have and just sit there with my long calls and wait into next year or the year after, my long ownership of the stock into the year after. Not a big deal. But the big deal here on that option is that you end up with 5 to 10 times your money in a couple of hours, right? Depending, you could do, if you did something very short, like something that expires this week, 10, 15 times your money. If you did something longer, 3 to 5 times your money in a few hours. Why is this good? Because as the stock price was falling, you're getting paid because you're hedged. So there are certain people that try to use options primarily just to profit from movement of the stock price. There are other people that back away from the situation and say, I've made a good profit today on shares owned. Why don't I protect it a little bit with some options? Well, guess what? My original recommendation is 2 to 4% of your portfolio in puts. And the agenda there is, hey, what if Tesla dropped by 1 to 200 points? If you have $1 million in shares, you just covered all the potential losses you had. You get them back and you can reinvest them to buy more shares, or theoretically, you could even go back in and buy some more calls. You can do whatever you want with it. The point is that earning 200K, earning 100K or 10% of your money in a few hours is not a bad deal. So there are other strategies out there. For example, you could, if you did a straddle that we've talked about, and you can go back to our other top secret trading shows, a straddle today at 1150 would make you look like a genius and giving you 4 times your money, maybe 5. So I just want to point out that what I'm recommending to you guys, it's a really good idea to do what's called paper trading, where you sit back and say, I could paper trade this thing and figure out, hey, where where are things going? Why? How can I make some money here? A or B, you could actually do some trading in this regard because there's something called hedging your portfolio or insuring it. And just like with auto insurance, the beauty of it is that that auto insurance, if you have an accident, it pays off. If it doesn't pay off, you lose your auto insurance money. So guess what? If Tesla's stock price had kept rising there, you're making money on your long-term ownership of the stock or your calls anyway. But if it starts to drop like it did today, you clean up on the put side of this and everything's great. So I will say that doing this show and doing some of the shows that I do, particularly when we get trading, we're trading puts and calls, it's a pain because there's a lot of little things you learn over time that become like instant. Like, oh, wait a second, that sucker's up 150 points, 100 points in a day. A pullback is kind of normal given how well they've done. And so one can actually make some really good money and pad your portfolio with that extra cash by instantly having in mind, hey, I own a lot of shares, so the puts are ensuring my profits that I already have, and it's a possibility I lose the money on those puts because a put is basically an assumption that the stock price is going to fall. And if it keeps rising, you already have the shares. So the increasing value of the shares will cover any losses you have on the put. So I just think that in this case, it's prudent and wise when you have a nice gain to really get in there and use puts as an insurance policy against all the gains that you've had in a short period of time. So I could say go into this more intensely, but in general, one of the things that I'm thinking about is sort of a tool basket where as you watch the markets and you're seeing things happen, and in particular with Tesla, you're going to be in an interesting position because you're going to say, oh, we've seen this before. These are the tools I have that I can choose to use or not, and let's get after it. And then you make a great deal of money in the process. That's kind of the game. So I wanted to run this by you today. It is a travel day and we don't have all our equipment sound-wise, etc. We're working on getting it louder by more proximity to voice. And so I really, really think you should read up on puts. I really, really think if you're generating a nice profit, try protecting it a little bit because it's nice to keep it versus give it back and have more money in your account in the process. Any rate, we look forward to your comments and questions. Please remember to like and subscribe. We have some SpaceX shows if there's interest. Also wanted to encourage you to join us on Patreon. We also want to note that some of the trading we're handing out is typically paid for training, so $5 or $10 either on our Patreon or on our or on our PayPal would be greatly appreciated. And then we also wanted to note our health tips. Do not go to bed within 4 hours of eating, ideally minimum 2 to let the food digest. And so we definitely want you to do well, hence the show today. Again, please take time to like and subscribe. And tschüss German, au revoir French, asante, Swahili, Zdravstvuyte Russian, Zdravstvuyte meaning hello, Do Virginia meaning goodbye in Russian, Namaste Hindi, Arrivederci, Italian, Salam, Islam or Muslim, Khoda Hafiz Farsi, Namaste Hindi. And in Jamaica we say, Nuff respect, walk good man. Thanks for joining us. Have a great day. Bye for now. Congratulations on some great numbers on Tesla.